Guys, today I'm going to discuss one of the most important and most discussed topic, marginal and absorption costing. As we know that there are different types of costing system, process costing, job order costing, this costing, that costing, but we also have marginal and absorption costing. Guys, marginal absorption costing is so very important. Why? Because it comes repeatedly in CMA exam, CMA part 1, and if you're giving your ACCA papers, F2 like management accounting or F5 as performance management. I would say that your exam is incomplete if marginal absorption questions are not there. Guys, I am the commerce specialist. Welcome to my YouTube channel where you'll find videos covering syllabus areas of various academic qualifications and professional certifications. So why are we discussing marginal absorption costing? Marginal absorption costing are two different approaches to calculate cost per unit. So if you are a manufacturing concern, if you are manufacturing something, an item, maybe a marker, we would like to know what is the cost of making one marker. And this can be calculated either through marginal costing or absorption costing. I will discuss more about marginal absorption costing, especially the theoretical aspects, why, when, how to use, what are the advantage, disadvantage, all these. But first, let's talk about numbers. Please remember, whether you are asked in the examination question or not, the very first thing, if you are attempting a marginal absorption costing question, you got to calculate cost per unit. So how cost per unit is calculated under absorption and marginal costing? Have a look. Details are given. If I'm calculating cost per unit under marginal costing, I have to take direct material cost per unit, which is given on top, $20. I have to take direct labor cost per unit, which is given again on top. I'm just copy pasting from up. Then you got variable production overhead cost per unit, which is again $20. And I total this. That's it. I have cost per unit, which is $60. So please remember, if you are calculating cost per unit under marginal costing, you got to take direct material cost per unit, direct labor cost per unit, and variable production overhead cost per unit. These are mandatory. You have to search the question further. Obviously, variable production overhead cost per unit is not given, that's different. But normally, most of the time, when you are calculating cost per unit under marginal costing, direct material cost per unit, direct labor cost per unit, and variable production overhead cost per unit, and that's all about it. If you are given any other variable cost, do not include that. Direct material, direct labor, variable production overhead. So you got cost per unit under marginal costing. Now let's talk about absorption costing. How to calculate cost per unit under absorption costing. If you look at this, same data, under absorption costing also, I have to take direct material cost per unit. I have to take direct labor cost per unit, which is 20. I have to take variable production overhead cost per unit, which is 20. Under absorption cost per unit, one more cost element is there, which is fixed production overhead cost per unit. And what I'm going to do is, if you look at the fixed production overhead here, which is 40,000. So I'm going to take this 40,000 and I'm going to divide it by the capacity. We are given the capacity, production capacity, which is 1,000 units. So when I divide 40,000 by 1,000, I'm getting $40. So now if you look at absorption cost per unit, this is coming to $100. Once again, marginal cost per unit and absorption cost per unit are 90% the same. The only difference is when you're calculating absorption cost per unit, you got to include fixed production overhead cost per unit. To make the example very simple, let's say fixed production overhead, we're talking about rent of the factory. So the rent of the factory is 40,000. We have to divide it by the capacity. Let's say the maximum units can be made, which is 1,000. So what will be the rent per unit? 40. So if you're making a table, for example, or we're making any other product, calculating cost of one unit under absorption will include cost of material, cost of labor, cost of variable production overhead, and cost of fixed production overhead, for example, rent of the factory. But when we talk about marginal cost per unit, we do not include fixed production overhead cost. Now, there is a possibility in an examination question, you are also given, other than fixed production overhead, you may be given fixed non-production overhead. Just ignore them. Other than variable production overhead, you may be given variable selling overhead. Just ignore them. They do not come here. So finally, if you're calculating cost per unit under marginal, 3 items: direct material, direct labor, variable production overhead. If you're talking about cost per unit under absorption costing, 4 cost items: direct material, direct labor, variable production overhead, and fixed production overhead. Under normal circumstances, the cost per unit under absorption costing will always be higher. Why? Because we are absorbing. Absorbing means including fixed production overhead also when we are calculating cost per unit. Whereas in marginal costing, we don't have fixed production overhead. I hope this much is understood. That's the very first part, calculating cost per unit under marginal and absorption. Second thing, what you are asked most of the time in exam is to prepare profit and loss statement. So what I'm going to do now, I'm going to prepare profit and loss statement, calculating profit and loss under marginal and absorption. In order to prepare statement of profit and loss, whether it be marginal or absorption costing, we need some basic data. We need some basic details like selling price per unit, how many units we are selling, how many units we are manufacturing. Only then we can calculate profit or loss under absorption and marginal costing. And these details are given here. Can you see? Selling price per unit is $200. Production is 1,000 units. Sales is also 1,000 units. So now I'm calculating profit and loss under marginal costing first, then absorption costing. When we are calculating profit and loss under marginal costing, we start off with sales. Sales is always selling price into the number of units sold. This is your selling price and you're selling 1,000 units. So selling price is $200 and you're selling 1,000 units. When you multiply, you get 200,000. This is your sales. Then you write less variable cost of goods sold. Another name for marginal costing is variable costing. You can also call it direct costing. So after writing variable cost of goods sold, you write opening stock. I'm assuming this is the first year of operation. So if a business is new and it is the first year of operation, it won't have any opening stock. So I'm assuming opening stock to be 0. Then you write at production cost. So how many units did you manufacture? 1,000. So your production is 1,000 units. And each unit cost you under marginal costing $60. So you multiply it by $60. So you get 60,000. Add this, 60 plus 0 is 60,000 and less closing stock. Now here you need to be very careful how to work out closing stock. How to find closing stock. So if there is no opening stock and you need to know whether we have closing stock or not, just compare your production and sales. How many units we are making? We are making 1,000 units. And how many units we are selling? We are selling 1,000. So we made 1,000 units, we sold 1,000 units, nothing is left, so there is no closing stock. Closing stock is 0. So 60 minus 0 will give you variable cost of goods sold, which is again 60,000. You subtract it from sales on top, you will get contribution margin. $200 minus 60 is 140,000. Once you get contribution, the meaning of contribution is selling price minus or variable cost. So as I told you, marginal also means variable, and these are the variable costs. This is 60. So from selling price, I have subtracted all the variable costs, I get contribution. Once you get contribution, the only step left is you have to minus less fixed cost. Now let me tell you, when I say less fixed cost, I'm talking about all fixed cost, whether they be production or non-production. In this question, luckily we are only given one fixed cost, which is production cost 40,000. So I'm writing here fixed production overhead, which is 40,000. I subtract, I get 100,000 as my net profit. So now I'm calculating profit and loss under absorption costing. Most of the steps are the same except a few. Just have a look. Profit and loss under absorption costing. I start off with sales as usual. Sales is always selling price, which is 200 into number of units sold, which is 1000 in the question. So sales would again be the same because the question is the same. We are selling 1000 units and each unit is sold for $200. Less just cost of goods sold. Opening stock. As I told you, it's a new business. New businesses don't have opening stock in the first year. 0. Add production cost. Add production cost. Again, how many units we are making? Production says 1000 units. So 1000 units. What's the cost per unit under absorption cost? Is 100. So 100. You multiply, you get 100,000. 100,000 plus 0 will give you 100,000. Less closing stock. I repeat, if you want to know whether we have closing stock or not, first of all, think, do we have opening stock? In this, the answer is no. There is no opening stock. Okay, look at the production. How many units we are producing? We are producing 1000 units. How many units we are selling? We are selling 1000. So if we made 1000 and we sold 1000 units, there is no closing stock. Nothing is left in the end. So closing stock here again is 0. So you get cost of goods sold. 100 minus 0 is 100,000. This is your cost of goods sold. And when you subtract it from top on sales, you get net profit, which is 200 minus 100 is 100,000. Now, sometimes students ask me why I did not subtract, like in marginal costing, I subtracted fixed production overhead. Here, why I did not subtract fixed production overhead? The answer is the fixed production overhead is already included here in the cost per unit. Because fixed production overhead is included in the cost per unit, that's why it is 100. That's the reason I'm not subtracting it here. Okay? But in marginal costing, when I calculated cost per unit, I only took the variable cost, direct material, direct labor, variable production overhead. Fixed production overhead was not here in the cost per unit. That's why I subtracted it here. But under absorption costing, while we are calculating cost per unit, fixed production overhead is already factored in, is included. That's why we don't subtract it here. Now, some important observations. When your capacity, production and sales is the same, in other words, there is no opening stock, there is no closing stock, profit under marginal costing and absorption costing will also be the same. So if you look at what is the profit under marginal costing, 100,000. What is the profit under absorption costing? 100,000. Why profit under absorption and marginal costing is coming the same? Because there is no opening and closing stock. Now I'm changing the question a bit to include the effects of closing stock. I am changing also a question a little more to see what happens when your capacity is 1000 and you're not making 1000, you're making some maybe more or less units. Then how these workings will change. So let's have a look. So guys, what I have done now is I've just changed the question a little bit. All other information is the same. I only changed the production. Now we are making 900 units. Though the capacity is 1000, but we are making 900 units. And we are making 900 units, but we are selling only 600 units. So now what effect it will have on profit and loss calculation? Let me tell you, the cost per unit does not change. Because the question is the same, I repeat, when we calculate cost per unit under marginal costing, we only have to look at 3 cost elements: direct material cost, direct labor cost, variable production overhead cost. But when we calculate cost per unit under absorption costing, direct material, direct labor, variable production overhead, and fixed production overhead as well. That's how marginal cost per unit and absorption cost per unit, they differ from each other. Only because of one component, that is the fixed production overhead cost per unit. Let's talk about calculation of profit and loss under marginal costing. So I'm talking about profit and loss under marginal costing. We start off with sales as usual. We are selling how many units? Please note, we are selling only 600 units. So selling price per unit is the same as before, 200, and we are selling 600 units. So the sales comes to 120,000. Next step is less variable cost of goods sold. Opening stock, again, I'm assuming it's the first year of operation, therefore opening stock is 0. Add production cost. Add production cost. How many units are we making this time? We are making only 900 units. So we are making 900 units. And under marginal cost, cost of one unit is $60. So you multiply by $60. 900 into 60 will give you 54,000. 54,000 plus 0 will give you 54,000. Less closing stock. Now please remember, when we are talking about closing stock, always think, dig in the question, do we have opening stock? The answer is no here. Alright, if we don't have opening stock, how many units are we producing? We are producing 900 units. How many units are we selling? We are selling only 600 units. So if you are making 900 units and selling only 600 units, how many units are left at the end of the year? 300 units. So closing stock we have now 300 units. And each unit cost us how much? $60. This gives me 18,000. So 54,000 minus 18 gives me 36,000. This is my variable cost of goods sold. This variable cost of goods sold I'm going to subtract from sales on top, which is 120,000. This gives me 84,000, which is my contribution margin. From this, in marginal, the only last step is less fixed cost. All fixed cost. Please remember, when I say less fixed cost, I mean all fixed cost, whether they be production or non-production. In this question, there is only one fixed cost. Had there been any other fixed cost, I would subtract all of them at this point. So we have fixed production overhead, which is 40,000. I subtract and I get my net profit. I get 44,000. This is my net profit under marginal costing. No difference. The only difference is the closing stock. How I got to know that closing stock is there? There was no opening stock, and I compared then production with sales. If I'm making 900 selling 600, 300 units are closing stock into the cost per unit. Now let's do profit and loss under absorption costing. So this is profit and loss under absorption costing. We start off with sales. Because the question is the same, sales will always be the same. 120,000. That is selling price into number of units. Less cost of goods sold. Opening stock, as I told you, it's the first year of operation, therefore zero opening stock. Add production. Add production cost. We are making how many? 900 units. So 900 units, but into absorption cost per unit, which is 100. So 900 unit into 100 will give you 90,000. Add this, you get 90,000. Less closing stock. Now here again, closing stock is 300 units, difference between production and sales. So 300 units into absorption cost per unit, which is 100. So 300 into 100 will give me 30,000. When I subtract 30,000, I will get my cost of goods sold, which is 60,000. I subtract, I get 60,000. which is kind of my gross profit. Ladies and gentlemen, here you got to be very careful. When we are calculating profit and loss under absorption costing, you really have to pay attention to what is the capacity and what is the production. Now, if you could see that the capacity is 1000 units, but the production is 900 units, which means we are underutilizing the capacity. And underutilizing capacity is known as underabsorbed overheads. So if we make 1000 units and sell, each unit will recover $40 for rent. So 1000 into 40, our rent will be totally recovered. That is the meaning of absorption, recovery of fixed cost. How do we recover fixed cost or any cost, whether it be variable or fixed? When we sell to the customer, we want customer to pay us for our cost. We want to recover all the cost from the customer. So how much of fixed cost per unit I am recovering from customer? 40. Had I made 1000 units, each unit will recover 40 for my fixed overheads. So 1000 into 40 is 40,000. So my fixed overheads are totally recovered. But in this scenario, what is happening? Although my fixed overheads or rent of the factory is 40,000, I could have made 1000 units, but I'm only making 900 units. So if I make less, I sell less and I recover less. So please remember, when your capacity is more and production is less, we have to calculate under absorbed overhead, under recovered overhead. So this is the additional working here. I will say less under absorbed fixed production overhead. And for your understanding how to calculate, first you look at the number of units. Capacity is 1000 units and your production is just 900. So how many units you are not making which you could have made? 100 units. This is your under absorbed units into the difference in cost per unit. 60 minus 100 is this 40. So on 100 units which you did not make, $40 of overhead could not be recovered. So when you multiply, you will get 4000 here. Okay, so you minus, you get 56,000 as your net profit. Now, few important observations, ladies and gentlemen. If you look at profit under marginal costing is 44,000 and profit under absorption costing is 56. So profit under marginal absorption is not the same. In the absence of closing and opening stock, profit under absorption and marginal costing will always be the same. But since we have closing stock here, because we were producing 900 and selling only 600 units, 300 units were closing stock. Because of closing stock, the profit is not the same. So sometimes you are asked to reconcile the profit. So let's see how it is done. So I'm using this space now for reconciliation of profit. Reconciliation of profit. We always start with profit as per absorption costing. So if you look at profit as per absorption costing is 56,000. Less difference in closing stock. Less difference in closing stock. Now, if you notice, the closing stock over here is 18,000 and the closing stock here is 30,000. So if I find the difference in closing stock, which is 18,000 minus 30,000, gives me 12,000, and I wrote less. So less, you will get 44,000. This should be profit as per marginal costing. So in marginal costing, do we have 44,000? Yes. So this is a litmus test to see if the profits are different. My observation is profit are different because we have closing stock. Is that observation true? Hence proved. Profit as per absorption costing, less difference in closing stock. Closing stock under marginal is 18, closing stock under absorption is 30. So 18 minus 30 is 12. So if you adjust the difference in closing stock to profit of absorption costing, you will get profit as per marginal costing. Now, another important variation in the question could be that your capacity is 1000 and you're making more than 1000 units. Let's say 1200 units. Sounds impossible, but it is not. It is sometimes possible that you go beyond your capacity. Your production goes beyond your capacity. So I'm not going into detail how it is possible, but let me tell you it is possible. So if your production is 1000 units and you're making more than 1000 units, let's say 1400 units, that means you are making more, selling more, recovering more of fixed overheads. You will be recovering more than this 40,000. If that is the case, marginal costing calculation will be the same, but in absorption costing, when you reach this point, instead of less under absorbed overhead, you will be adding over absorbed overhead. And what will be the calculation? You look at capacity and you look at the production. If production is 1400, for example, this is 1000. So how many extra units you're making than your capacity? 400 units. 400 units with the difference in cost per unit, which will be 40. So you will write add over absorbed overhead, 400 units into 40, 16,000 will be added and you'll get the profit. Sometime in a theoretical MCQ or in a theoretical question, you are asked why a company would use marginal costing. So let me tell you, marginal cost, as the name says it, marginal cost means cost of producing an extra unit. Another name for marginal costing is direct costing or variable costing. So if you want to know the cost of producing an extra unit, that is always the marginal cost. Sometimes you are asked in the question, what's the minimum cost per unit? Under which method you will get minimum cost per unit? The minimum cost per unit is always the marginal cost per unit, below which you are not willing to sell. So your marginal cost is the minimum price to charge to your customer, number one. Companies use marginal costing when there is a lot of competition around. You are not the only seller. Maybe you are participating in a bidding process, so you have to send a quotation. Obviously, if there are so many sellers out in the market, would you like to quote a price of one unit $60 or $100? Obviously, if you're bidding, if you're in competition, if you have to send your quotation where other companies are also participating, you would like to quote the minimum possible price. The minimum possible price is marginal costing. On the other hand, yes, companies do use absorption costing to calculate cost per unit. Why? Because it is recommended by the standards. For financial reporting purposes, absorption costing is to be used in order to calculate cost per unit. That is as per IS2. Now, why would company use absorption costing other than the financial reporting requirements? The answer is, what if my company has the monopoly? I have no competition. So I would like to include all my costs into cost per unit. Even if the selling price goes high, the customers will buy from me because I am the only option. But if there is a lot of competition and I'm competing with other firms, I need to quote my price based on marginal costing, which is the minimum. So ladies and gentlemen, if you have any queries relating to marginal and absorption costing, any other questions, any doubts in mind, leave a comment in this comment section. I will reply to you as always. So guys, if you have not yet joined my closed group, the link is appearing on the screen. Join my closed group for host of benefits and rewards, especially for CMA students. If you need to buy CMA resources, I've shared a link in the description. You not only get the best possible resources, but huge discounts as well. Guys, if you have not yet subscribed to my channel, please subscribe to my channel. Press the bell notification button so that you get my videos on a timely basis. If you like this video, please share it with your dear and near ones so that others can also benefit. Thank you so very much for your precious time.